Last week, U.S. stock investors dealt with the door economic data and escalating trade tensions between the United States and China over newly announced American restrictions on China's telecom giant Huawei, which made U.S. equities post their biggest weekly loss in nearly 2 months. However, Wall Street edged higher on Friday as a continued oil price rally outlined these concerns. The benchmark S&P 500 rose by 0.4% to 2,863.70. It still ended down by 2.3% for the week. U.S. consumer spending tumbled by an unprecedented 16.4% in April, nearly double the record contraction in March. Meanwhile, the Trump administration added to uncertainty by tightening restrictions on Huawei Technologies Ltd. Washington said non-US companies that make processor chips for Huawei must obtain permission to use American technology, a move that threatens to disrupt sales. China's state media fired back, saying the country would restrict or investigate American tech firms if the US blocked Huawei's supply chain. Despite Thursday's surge and Friday's gain, the Dow Jones lost more than 2.6% for the week, ending at 23,685.42 on Friday. Markets took a hurt from the chief American central banker's remarks over the weekend on a gradual economic recovery. Federal Reserve Chair Jerome Powell expressed optimism the U.S. economy can begin to rebound in the second half, and said that more monetary stimulus was on the way if required. Powell cautioned that a full recovery may not happen until a coronavirus vaccine is found. However, he said that the U.S. economy will avoid a depression. That appeared to encourage investors who are looking for signs of when global economies might return to normal. Market participants appear to ignore rising infection numbers. Forecasters warn that the latest market buoyancy might be premature and a return to normal could be some way off. Meanwhile, the NASDAQ Composite added 0.8% on Friday to close at 9,014.56, posting a 1.2% fall week on week. This week, U.S. stocks surged on hopeful developments surrounding a potential coronavirus vaccine, with investors also hoping for stimulus to cushion the economic blow from the pandemic. According to analysts, market sentiment will likely remain fragile as investors wind government stimulus plans against rising U.S.-China's tension and poor economic data. Powell and Treasury Secretary Steven Mnuchin are due to appear on Thursday before a Senate panel to report on recovery efforts. Among stocks, semiconductor shares including Qualcomm slid by more than 2% after the Trump administration moved to block semiconductor shipments to Huawei. Shares of Qualcomm Incorporated fell by 5.1% on Friday to finish at $75.77. For the week, the stock posted a 5.9% decline. Many analyst firms have already submitted their reports for Qualcomm stocks, with Wells Fargo repeating the rating for Qualcomm shares by setting it to underweight. The predicted price for Qualcomm stocks in the upcoming period, according to Wells Fargo, is $70. Goldman, on the other hand, stated in their research note that they expect to see Qualcomm stock at the price of $61. You're watching a weekly review of the US stock market on InstaForex TV channel. We wish you profitable deals.